Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. A little closer to the board today. We're going to expand on what we talked about on Wednesday. We were talking about how you do not have to be accurate in order to be profitable in the stock market. You also don't have to win a lot in order to win in the long run in the stock market. And I gave you all the stats on that on Wednesday's video. What I didn't do was show you an actual entry stop target, right? To control that. So today what we're going to do is we'll say, all right, you know the stats, you're tracking your stats. Maybe I helped you build a spreadsheet or whatever it is there. If you're joining us on our research site here coming up soon, you go to jazzwealth.com/research. Any of those members, I'll give you that spreadsheet once it's up and live. And of course, customers, you get the spreadsheet as well. Today, what I want to do is say, all right, we had an example from that video. We had someone who had a win-loss ratio of 4, which you might go back and watch that if you haven't seen that video. And we said their break-even was 20%. Meaning, if they just got 20% of the trades right, they'd be able to continue to trade, not by making a profit, not with any loss. They would break even. And so we went over those stats. I hope you'll check that part out because it may make more sense to you. We also said that trader in this case was betting $25. So they were winning 100 to make, they were making 100 and they were risking $25. Now, what I want to do today is actually put that into a trade. So we're going to go over an example here of something, position you like. It could be anything, whatever your strategy sort of focuses you in on and you find that you believe the stock is going up or down. Today, we're going to assume that this stock is $50 per share, okay? Now, we know we want to risk 25 over here. We're willing to lose we want to win 100. We're willing to lose 25, 4 times our risk. And so now we want to determine if it drops, at what point do we lose $25? Well, that's totally controllable. It's actually called controlling your risk. What you first do, every trader's got to do this, you have to have a belief of where you're both right and where you're wrong. Meaning, at what point, you believe the stock's going up in this case, but at what point do you believe that your analysis was off or something has changed, there was some news or whatever, and you need to cut the loss? Well, we know it's going to be at $25 because you've already set that out. This could be whatever number you want it to be, by the way. Okay, so the first thing most people do is say, well, there's a location. Maybe it's this prior low or there's some number down here where you believe that the stock doesn't have a chance anymore, at least in the time that I'm willing to play along. So let's say that number is $48. So you've now said, for whatever reason, I believe that at this point I am wrong. I will accept it and move on. I know I don't have to be very accurate, so I'm happy with that. Well, this is $48. $2 is the difference there. So because you're willing to risk 25, you divide 25 by 2, you get 12 and a half shares, assuming you can use fractional shares. That's how many shares you would buy. So that both coincides with your strategery or whatever, and it also coincides with your belief on the individual stock, okay? So if the stock drops by $2, you lose exactly $25. It's okay, you don't have to be all that accurate. Now, on the way up, we're going to look at it and say, at what point do we want to get out? You better not sell for anything less than 4 times your risk. The stock can wiggle around, do whatever it wants, but you need 4 times your risk, which is $2 in this case. So in other words, you need the stock to be $58 or higher. What does that do for you when you are analyzing a potential trade? Number 1, gives you the confidence that you're risking exactly what you want to risk. Number 2, it makes you go, is that a chance? Is that going to happen? So on the closing beat, when somebody says, Dustin, what do you think about this stock? I don't want to hear that question. I don't like that question. You really would be going, I'm risking $2. I need 58 because I need 4 times my risk in this particular case. Dustin, do you think the stock can go to 58? Because I need it to go to 58 in order to fulfill my stats, right? That's the question. That's the focus. All of this is controllable before you start the trade, the investment, the swing trade, whatever you want to call it. If you do not believe this stock can make it to $58, you have no business trading it, right? You can try to find a way to reduce your risk, but you already defined that this is where you thought you should give it the room, or whatever. If you could reduce that to $1, all of a sudden you only need to get that to $54. Maybe that's doable. You're tightening your risk. I don't know. Do you want to do that? Okay, now let's do this example here where you want 4 times the risk, but can you sell before that? So you bought at 50, your stop loss is at 48. This is your line in the sand right here, and you need it to get to $58 at some point. Maybe you have a time stop. I don't know how you want to handle it from there. So let's say the stock is moving around mostly in your favor. Is there such a point where you could reduce your risk? Right? You can't sell early. Don't you dare sell early if you are not very accurate. If you are a very accurate trader and you get most of your trades right, you can sell early, right? You're tracking your trades, you know the difference. But at some point, what you can say is, I'm going to reduce my risk, right? I can now move my stop from 48 to 50 because the stock started moving in my favor. That could even improve your odds, improve your statistics, your trading and your stats and everything. Because now if the stock comes back down and it goes to 50, you lost nothing to take a chance at making 4 times your risk. So in this particular trade, if it were to keep moving higher and hit 58, you technically didn't risk anything. You weren't going to let it lose money. That improves your stats even more. These are the types of things you want to focus on if you're at home, unemployed, took your stimulus check and started investing. You've got to do these things. I do not know one single person who is successful who is not tracking their statistics, tracking their trades. There are programs that do it for you. I shared on Wednesday a spreadsheet that we give to all of our clients if they want to use it, and I'll give to our members as well. But I just wanted to expand on that. I just like talking about trading and kind of, that thing there, everything we just did behind me. So I hope you enjoy it. I'm going to wrap it up there. Probably good enough. Let me know what you thought. Can we expand? And if so, I'm not allowed to answer all the comments, but you could leave a comment that says, understood, but you missed a mark, or could you expand on this or whatever. Give me some ideas. I'm happy to talk about it. We are, of course, long-term investors for retirement, but while we're making sure you're hitting your goals and everything, sure love to talk about the markets and everything, as you guys know. So I hope you enjoy the rest of your day and evening, and thank you for watching.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.